Hello,
Hello,
how are you doing?
fine, sir.
Great, I'm happy to have you online for our session today. I want to thank you for, making a commitment to mastering a few things to improve your trading. Let me pass my sincere understanding of your condition because you explained some things to me, which is okay. And it's until that people open up that others will be able to understand their predicaments and be of help to them. So it's a sign of strength if you are able to come up and say, hey, I have a challenge, I need help. And any person in the right mindset will be able to understand that and be of help. So what I would like us to focus on in BWC, that's Binary Winners Club Success College, is this is not where we learn the basics. You probably know that. This is where we master stuff. It's not where we start teaching basics, support and resistance and stuff like that. This is where we teach you what you can use to trade the markets directly. And so
Okay, sir.
the few members you see here, all of them had taken several courses, but were coming to me and saying, look here, Bernard, I have tried many courses. They could even show me folders on their computers. There are so many folders of courses from different mentors, and they're saying, now the challenge is I am unable to be profitable still. And I'm looking at it and I'm saying, yeah, you're not alone. Many people have taken many courses, and for sure, they have not been able to make it at all. They just get confused. I don't know whether that's where you find yourself sometimes, that in spite of taking 1, 2, 3 courses before, when you face the market, you feel like something is still wrong. So maybe you can give me a little background about your trading so that we get in and pick one strategy, master it today.
Okay, sir. Thank you for, first of all, thanks to you. It's my dream to join your courses. I am waiting when you will offer. Last time I went for your course, but I failed to join due to my financial ability. But this time I managed some. I did courses from Isakshar, price action, mm, and BSA. So I
Yes.
have the basic ideas about the course. I already seen many mentors videos in the YouTube channels and others shares the members, but I also show your YouTube channel videos. That's fine. I am doing not that much good, but doing well.
Okay. Okay.
So I am searching for something that unique that will work in the market, and I will search focus only 2 or 3 or 5 things, and then I can trade in
Okay.
any market. I need not to do trade in every candle. I need a proper identification of suitable positions for profit, nothing else.
Okay. 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 I'm happy you have a focus. I'm happy you're focused, and what you're saying indicates there's room for patience from within, because sometimes the challenge comes in for people who are very aggressive. They want to trade every candlestick they find on the chart. That is not easy. It will take years to master the market in terms of every minute. Really, what you want is to make money. And this is what I tell my members. What matters is you are making money. Whether you are going to use candlestick psychology, or as you call it, price action only, whether you're going to use volume analysis, or even pure indicators. I can tell you in my experience throughout my life, when I started learning about binary options, I know several people who succeed only trading indicators. They just combine a few indicators. They have strict rules. They follow those rules. They are able to make profits from the market. I also know a few other people don't touch indicators at all, maybe except moving averages, which seem to be used by almost everybody else. They don't touch other indicators, and they're still profitable. But I also know people who combine these things, and they are profitable. But the same way, there are those who have mastered price action for long, they have never been profitable. There are those who have tried indicators, they have never been profitable. There are those who have combined all of these things, not profitable. There are those who have tried volume analysis, not profitable. Why? These things have some psychology behind them. Trading has some psychology behind it. In other words, you can learn 20 strategies, but you just need to identify one or two which are compatible with your personality.
Yes.
For example, this is what I've shared with many people. If you realize that you're not very quick in reacting, quick in making decisions, run away from 1 minute expiry options. Because in 1 minute expiry options market is moving too fast before you decide your OTM already. So just scale it up and start trading 5 minute expiries. In other words, if you are not quick in handling 1 minute candles, move up and start trading from the 5 minute charts. If you still think 5 minutes is moving too fast for you, move up to 15 minutes. What matters is you make profit. You do not have to show people that you are a ninja by trading in 1 minute and you're doing 1 minute expiry. No. What is important is you are able to satisfy your own needs. What are your needs? You want to be a profitable trader. Whether you are profitable on 1 minute, on 15 minutes, on 1 hour, it does not matter. In other words, if I asked you, 1 minute is giving you losses, but 5 minutes can give you profits, I think reasonable. If you are reasonable enough, you say, fine, let me use the time frame that's profitable for me. At the end of the day,
Yes.
what you want is money. So that's not to say you will not be able to trade any of these things, but it's important from the word go, you understand what works best for you, because there are many things you can study about markets and they will end up sometimes confusing you. I tell you, even after learning so many things, I keep learning every day. Sometimes I learn binary options, I learn Forex. Even at my state, I still learn new things. And I try to go back and see what I've learned over the time, so I'm able to either correct myself or remind myself. So for this particular program, this is a program. I call it a program because that's what it actually is. When I talk about BWC, Success College, my focus is I want to build as many people as possible who are profitable through particular strategies, not trading everything, but they trade specific strategies and they're happy with them. So that's why in our college, I focus on 5 price action strategies, which are easy to implement, which are profitable, and which are easy to understand.
Okay.
So they are simply 5. And they are applied at different time frames. They have different expiries. So you will have a choice. You can do 1 minute, you can do 3 minutes, you can do 5 minutes, you can do 15 minutes, you can do 30 minutes, 1 hour, depending on your choices. So you will have a variety to choose from. The reason I decided to create a success college besides our BWC Academy, in the academy we teach things from scratch. We assume you know nothing about binary options. But in the success college, this is purely for people who have some basic knowledge of binary options. Their main problem is they're not profitable. So we try to master certain techniques, which once you master them, you start using them to improve your results. So with that introduction, I want to introduce you to strategy number 1. Unless you have questions to ask, I'm ready. We hit the road with strategy number 1.
Okay.
Are you okay with that?
Okay, sir.
Yes. So strategy number 1. Now, strategy number 1, you decide to give them names if you want. Strategy number 1, I will call it breakout retest strategy. Breakout retest strategy. This strategy, I rate it, when you follow all the rules, 80 to 90% accuracy. When you follow all the rules, you will get 80 to 90% accuracy. That I can promise you. The problem will be you don't want to follow all the rules, or you are not patient. So
no, sir.
if you are patient and can follow
Yes.
all the rules, you will get setups that will guarantee you 80%, sometimes to 90% accuracy on average. Not today alone or this week alone, but throughout.
Okay.
A small challenge with this strategy, you may not get too many setups. And I know you know this. If you have a strategy that's very reliable, sometimes you don't get too many setups. Because, you know, for something to be very accurate, you need to filter out many things. The more rules you apply, the more trades you reject. But the most important thing is if you decide, today I want to do 10 setups, then you can always guarantee yourself around 8 of them will be profitable. Now, this strategy can be applied, is actually supposed to be applied on 30 minutes charts, 15 minutes charts, and 5 minutes. Okay?
Okay.
Because you need time to react. You need time to react. These are the correct time frames you can apply this. But you see, traders are very interesting. You can go and try it on 1 minute and see if it works for you. I don't try it on 1 minute myself. It works very well on 30 minutes, extremely well, and 15 minutes. But after some careful testing, I noticed 5 minutes also works quite well. Now, how many things do you need for this strategy? You need simple things. Number one, you will need to follow the trend. Now, don't tell me, Bernard, that story about trend is always confusing. I will show you how to determine the trend directly in this strategy. So everything is objective. There is no room for you to guess. Two, you will need to follow support and resistance, SNR. You might as well ask, Bernard, I've heard that there are many types of support and resistance. I don't even know the correct one and the most reliable. I will show which one you will be using here. All right? And when I teach you this strategy, anybody I teach this strategy will take the same trade and get the same result if they follow the rules. There's nothing to guess here. Then after you get this, you will have to follow a certain candlestick pattern. One, not many. One candlestick pattern only. We are not going to learn about all those many candlestick patterns. For this strategy, just one. And I'll show you what it is. Number four, you will look for a breakout. Okay? You will look for a breakout. You might ask, how do I know a breakout is genuine or a fake? I will show you that. Number five, you will look for a retracement or a retest. A retest of the breakout. A retest of the SNR after breakout. Simple. 5 things. Follow these 5 things, and you have a solid strategy that you can actually start using immediately you learn it. And I'm saying, when I'm saying immediately, I mean after today. We finish the course, we finish today's session, you will have the video, watch it again, start practicing. Start practicing. And in a matter of 1, 2, 3 days, by the time you are completing the course on Wednesday, you should be through with the this first strategy. You should have familiarized yourself so much with it to the point that you are able to confidently trade with it. And so, what do you need on the chart? You only need 2 things. You need one, apart from candlesticks, of course, you need EMA 21. EMA 21. This guy will tell you the trend direction. When price is above EMA 21, consider that an uptrend. When price is below EMA 21, consider that a downtrend. Simple. Number 2, you need your timer, your good friend here, because you need to enter the trade at the right time. If you enter at the wrong time, you can lose a trade easily also. Great. So what is the strategy? Now, I need to remind you one thing. Sometimes, even when we use indicators, don't forget your price action knowledge. Do not forget your price action knowledge. An uptrend will always be known as a market that makes a high, a low, a higher high, a higher low, another higher high, another higher low, another higher high, another higher low. Now, it must always keep going like this. The highs are increasingly going up. The lows are also increasingly going up. When this pattern changes, you may not be in a trend anymore. In other words, if this one goes up and stops here and then starts going down, now this uptrend might have ended somewhere here. Because this high did not break this. Remember, if you were able to draw this, you would see that every new high is breaking the previous high. This was the first high. To make another high, we broke this, a breakout. We go higher, come down. Then we break this high, go higher, come down. We break this high, go higher, come down. Now, if you see a market break this level, but doesn't go to break this high, but reverses, it means the trend is weak and might reverse. Same thing, going down, a downtrend, the market will make a low, make a high, will make a lower low, a lower high, a lower low, a lower high, a lower low, a lower high. Now, if it stops following this pattern of lower lows and lower highs, and for example, it comes down somewhere here, and then reverses and goes up, then this downtrend is tired, it's weak, may not continue, and might reverse. So even if we are using our moving averages, don't lose sight of this concept. Don't lose sight of that concept. It will save you some losses. So always consider an uptrend as one where you see higher highs and higher lows. Consider a downtrend as one where you will see lower lows and lower highs. Remember this. Even when you're using a moving average, I'm always saying we have an uptrend if price is above the moving average and making higher highs and higher lows. We have a downtrend if the candles are below the moving average and making lower lows and lower highs. So for all strategies, remember, all strategies we are using trend. Very important. For all my strategies, we also take a trade at SNR. For all strategies, we consider candlestick patterns. At minimum, these three things must be observed. And if you have been to my YouTube channel, you have seen I always teach. This is what I call TLS. Trend, level, signal.
Yes.
Okay. So strategy number one, write in application. So follow me closely because this should be easy enough. But at the beginning, you might have a struggle to, understand them. So let me give you all the rules for a call option or a higher option. Okay. I will share some clear notes on this, but for now, what I want you to be sure about is you have an uptrend. Okay. Very important rule. You only trade higher if you are in an uptrend. Now, rule number two, identify a bullish. This is a bearish. Identify a bearish 2-bar reversal pattern. Identify a bearish 2-bar reversal pattern. I'll show you what that is. Wait for a complete or a true breakout of the SNR, of the pattern's resistance zone. Show you, don't worry. Wait for a candle to retrace the bottom of the zone. Number 5, at the touch of the bottom of the zone, place a trade. Rules, filters. Price must not start by going up before going down. Then also check breakout candle must open below the zone, below the resistance zone. Finally, the touch must be the first one. Now, you can take a screenshot of what I've typed, but I still share some of these rules with you on your Telegram account so that you are able to refer. Now, this will appear to be very many rules. They are not. Let me now guide you step by step on how to apply this strategy on the chart. For a call, you reverse this, you'll get the other one for a put. Great. Let me just clean this up. Let me zoom my chart a little bit so that you are able to see candles much better. So if we start from the beginning of the day, let's say we are on 15 minutes chart or 5 minutes chart. This is Euro USD. Beginning of the day is here. The price is above what? Our moving average. This is EMA 21. Are you following?
Yes, sir.
Now, what I need you to do is already the EMA is doing the work of a trend. So we know we are in an uptrend here. So step number 2 says, identify a bearish, a 2-bar reversal pattern. A bearish 2-bar reversal pattern. Let me show you what this is. If you have a green candle, any type, sorry. If you have a green candle, any type, like that, followed by a red candle, any type, like that, that is a bearish 2-bar reversal pattern. Bearish.
Okay.
If you have a green candle or a red candle first, you have a red candle somewhere here, immediately followed by a green candle, something like that, or even bigger. That is a bullish 2-bar reversal pattern. This is the only pattern this strategy uses. In an uptrend, you look for this, and you draw your support and resistance above it. That's resistance. This is support. Now, if there are wicks, you will include the wicks in your drawing. So in that case, you have a resistance zone like that. Are we there? If you have wicks down here, you will also include that in drawing your support zone. So this is your support zone. You draw this in a downtrend, you draw this in an uptrend. So this resistance zone, this is a support zone. You draw it between the body of the candles and the higher wick, between the body and the longer wick. Great, so let's carry on. Now we have identified we are in an uptrend. We have to look for patterns. So the 2-bar reversal pattern you use must be the most recent. Must be the most recent. In other words, when I'm saying the most recent, is like when you are here. If this candle closes, then we have a resistance zone here. This is the most recent pattern. Are we there?
Yes.
This is the most recent. Of course, there were others, like here. But I'm not going to draw here because this is the newest, the most recent pattern on the chart. But because now we are backtesting and there's nothing repainting on our chart, for purpose of illustrating this, let me show you how to do it. So uptrend, you draw your resistance zones. Now, for example, you are here, you will draw between the body and the longer wick. This is wick number 1, this one, and this one. Use the longer one. Now, what do you look for after you have drawn? Let me get a good example that can be able to illustrate my point exactly. And here we have a perfect example for a trade. Now, here is a green candle followed by a red candle. I've drawn my zone. I don't know if those lines are okay, or I change the color to blue.
Okay, sir.
Are they good? Or this is a better color? This one?
Yellow, yes.
This okay?
Yes, no problem. Okay.
All right, you can see. Because I really wanted to see everything clearly. Let me zoom further. Much better now, I believe. So I spotted I spotted we are in an uptrend, rule number 1, because price is above the EMA. We have a green candle followed by a red candle, no gaps. I draw a line on the body and another line on the longer wick. These are 2 wicks, 1 and 2. Now, rule number 3, I wait for a candle to close above the entire zone. Are you seeing that? To close above the entire zone. This between the red candle and from the body of the green candle to the entire zone here. A green candle must close above. Now, this candle that closes above the entire zone, there are 2 rules to follow. It cannot open inside this zone. It cannot open above the zone. It must open below the zone and break the entire zone and close above. That's a very important logic. After closing above, the body of the candle that closes above this zone must be at least 30%. A third of the entire candle must be above the whole zone. Now, if you look at this candle from here to here and from here to here, this is almost 30% or 40%. Yes, the part of the candle above the zone is a large portion of the candle. This is a good breakout. Then the next rule says you wait for a candle to come after the breakout. Then a candle could be the next one or the second or the third one or the fourth will come down and touch the bottom of the zone. This line down here will start from above the zone, move down and touch the bottom of the zone. Immediately it touches the bottom of the zone, you place a trade and the trade must expire at the close of that candle.
So which candle I have to place the trade? Next
yes,
so
if this is a 5-minute candle, this candle has come down, and now we have 3 minutes remaining. The expiry is the 3 minutes remaining. Now remember, on IQ option, all right, on IQ option, I can choose 5 minutes like this. I know 5 minutes will be 30 or 35. Is that true?
Yes.
That's how you tell. This is 5, this is 30, it can be 35, 45, 50, 55, 00. That's how you choose. So for example, if now I switch to 5 minutes here, and now all my candles are 5 minutes, all my candles are 5 minutes on this chart, and now I'm here, and I want to ensure that my trade expires in 5 minutes, I can only choose 30. Round number or 5. Round number or 5. So you see now this one is saying 2 minutes and 25 seconds remaining. So if I choose this and I place a trade, my trade will expire at the close of this candle. Okay. All right? So that's what you do. So the trade must expire at the close of this candle. And that's an ITM over there. I will give you a few more examples so that you master this for an uptrend, then we'll go for a downtrend. So let's say you were here. You saw this pattern. Remember, this is the pattern we are looking for in an uptrend. So you draw it in advance. Body to wick, the longer wick. This candle opened below the entire zone and closed above the entire zone. At least 30% of the candle is above the zone. Remember that. Then a candle comes, touches the bottom of the zone. That's where you place your trade. Expiry, close of this candle. Same thing here. You spot this pattern. You draw your entire zone. You wait for a candle to do the breakout. This candle started from here and closed above the zone. At least 30% of the candle is above the zone. This is a smaller candle. From here to here, this is a good portion of the candle. Almost 40%, but let's say 30%. Remember, body only, not wicks. The red candle here came and touched the zone and stopped there. And this is an ITM also. So those are 2 examples. Let me give you a 4th example for an uptrend so that you can master the rules. And sometimes it depends on how you look at it, because let me see whether I can get a slightly different variation of the same setup.
If you found red in the uptrend, if you found red candle first, then green candle, then we will take it, or first green candle, then red candle.
Yeah, for a downtrend, it will be the opposite. It will be a red candle followed by a green candle.
Okay.
Maybe let's go downtrend. We don't have to waste more time. We can go downtrend. Then when we start checking the market, we can now scan for both. Let me see whether I can get a good example in a downtrend, a quick one in a downtrend. Here is one. We have a red candle followed by a green candle. Red followed by green. Okay. Red followed by green. There's no other pattern. Assume the market was just here. These other candles are not there. So this is the only red and green you have. So you draw your support zone like this, from the wicks to the body. This candle over here opened above the zone and closed below the zone. Are we together?
Yes.
This candle over here pushed back up and touched the top of the zone. This is where you place your trade. Expiry, the close of this candle.
Yeah.
Same logic. You keep doing that all the time. You will be winning most of your trades. Of course, there are cases where you will lose. That's okay. We lose trades. Even as professionals, we lose trades sometimes. And that's normal. We must accept losses also in the market. For example, if you were to trade this setup, this would be a clear loss. There's no problem with that. If you do this will be a clear loss. Okay?
Yes.
Market breaks below, comes back, and just ignores, touches here, and continues going up. Okay? But again, you need to be aware that sometimes in a downtrend, this is a reversal candlestick pattern, this pin bar. Ideally, meaning the market should be going up instead of going down. So with a few concepts you have mastered from trading, you should be able to save some of those trades that would otherwise lose. Now look at this setup here also. A downtrend, red, green, from the body to the wicks. See that? This candle starts above the zone, closes below the zone. A good portion of the candle is below the zone. That's very important. Don't forget that. At least 30%. In other words, a third of the candle must be below the entire body. That's how you confirm a breakout. The next candle pushes up, touches that line, and closes below. And that's how you ITM that signal over there. Few more setups. Now let's go 15 minutes. That was 5 minutes. The higher you go, the fewer signals you get per day. So why this strategy is powerful is you can trade it from any time frame. So if you open 30 minutes, you don't see anything, you go back to 15, maybe nothing, you go back to 5, you'll find something. All those time frames will give you some setups. Now, this is not a breakout. Most people think this is a breakout. This is where they get it wrong. People who draw levels like this, they draw on color change only. Green change to red, they draw the line, they say this is a breakout. In my opinion, that's not a breakout. And for this strategy, that's not a breakout. A breakout will only occur if we break above the entire zone from here to here. None of these candles was able to do that. So that's not a breakout. Now, in our case, we have this pattern here. Okay, we have our pattern here from here to the tail. Do we have a breakout here happening?
Yes, sir.
Is there a breakout here?
Yes.
Where is the breakout happening?
There, in our criteria, it's not matching, sir, because here it is happening here.
Where?
Happening here.
Okay. That's the breakout happening here after the market had switched to a downtrend and then went back to an uptrend. Okay? So by that time, you have a new pattern here. You can't use this old pattern. There's a new pattern here. Remember, we are using the most recent pattern, okay?
Yes.
So here there's no breakout. Here there's no breakout. This candle did not close above. This one started inside the zone, so no breakout, no breakout.
It's not clarify our roots.
Yes. Remember, part of your success is you have to follow the rules. When you are wrong and you follow the rules, you are happy. If you don't follow the rules and you lose a trade, you feel upset. There's no breakout here also, remember? From this pattern, there's no breakout. So it's good to identify valid breakouts. What about here? The downtrend now, red followed by green. There's a valid breakout here.
Yeah,
We touch the top of the zone and close below. That's an ITM right over there.
Yes.
Okay?
Okay.
You can see some other pattern here.
So in 15 minutes, what will be the time frame? In the same criteria. When it will touch in the top of the resistance level, then we will use it. Support.
Exactly. The strategy works the same regardless of your time frame.
Okay.
Yes, you can use it on 1 hour. The same rules. You have to monitor the expiry time. However, remember now, if you are on 15 minutes, it's a different story when you are choosing your expiry. So here, you'll have to remember in 15 minutes, it has to be 45, 0, 15, 30, 45, correct?
Yes.
All right. So here we go. So we have our support zone. Remember, I talk about zones. The candle opens above the zone, closes below the zone. This candle touches the top and closes below. Do you see how this is very accurate, by the way? You just wait for it to touch and you time. So your trade would be taking 1 minute, 2 minutes, 3 minutes, 4 minutes, depending on how quickly it went back to that level. So that was for a put. Then if you are going for up, the rules will help you avoid unnecessary losses. If you thought there was a breakout here and you are waiting for this candle to come down, you have yourself to blame because you are not following rules. This is not a breakout. This is not a breakout.
This one is the breakout.
This one is a breakout, yes, but the candle did not come to touch here.
Okay.
And even this one is not a complete breakout because look at the size of the candle above the zone. So small.
It's not 30%.
Yeah, it's not really 30%. If you are using your naked eyes, you should be able to see that. Okay?
Okay.
Now, one thing you need to remember, for example, and I need to tell you this filter. This is a very important filter also. When you see, okay, let's use this one. Then I'll show you something else. Oh, this is the wrong one. Let me assume I was drawing it here. Because we have green and red. This is a tiny zone. Okay? We have a complete breakout to the other side. Why are we losing here? This is a loss, correct?
Yes, it's a loss.
There is one thing I told you when I was typing the rules. The candle that is coming to touch your zone should not start by going up, then reject and change its mind, then start going down.
It should be start from the below.
You see like this candle at the moment, it opened here, it did not even go up. You see a very tiny wick at the top, eh? This current candle.
Yes.
You are seeing a tiny wick at the top, which means it did not try to go up really. It has been going down like this. So if I were to trade this setup, let's assume there was something like a level here, this would be a very nice place to place a trade, for example, because it has not gone up, rejected the price, and then come down. Okay?
Yes.
So a very good setup would be where the candle opens immediately and starts going down for a call, or opens here and starts going up for a put. Many times, of course, the candle can go up, then go down. Like in this candle, we may not be sure whether it started by going down, then went up, then came down. We may not be able to tell. But if you are waiting to do a call, then you see a candle go up, 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 then decide to start coming down. What should be happening in your mind? It has found resistance. The candle has found resistance. That's why it has changed the direction to the down. And in that case, you should be worried whether your trade will be working, because this can continue going down if there's a resistance. Similarly, if you are doing a call and you already have your level here, this candle has broken out and you see it going down, then stopping here and then starts going back up. That should worry you. That should worry you. A good signal would be let the candle open after the breakout, open here, start going up, touch that level. You can even wait for it to cross the level slightly, enter your trade, and then it can go down and maybe reject here and close here. So avoid setups where you see for a put like this, it should not go down for long, then start going up. It should actually open, even if it tries to go down just slightly, and then majority of the time, it should be going up instead. That filter will save you. 30 minutes time frame. I want to prove to you that this system works regardless of your time frame. So you should be able to trade it on any time frame you feel, any currency pair you feel.
Okay.
Okay, so let's move on from here. So this 30 minutes, I call it a trading lifestyle because once you master how to use this technique, your trading becomes a lifestyle. If you are a person who is very busy in the office, you can be monitoring 30 minutes candles or 15 minutes candle. You don't have to be under pressure. But if you have enough time, you can do it on 5 minutes. No big deal. So I scanned my chart. We were going up. I need to see red. I need to see green, red, and then a breakout. I don't see any of those. Green, red, there's a breakout here. So my first setup would have been around here. Okay. Now remember, you need to draw your levels correctly. Otherwise, you will be able to miss some opportunities. So I want to believe that after this valid breakout, this candle came close. When the zone is very close like this, you don't expect the candle to go all the way down. When it's very close, remember the wicks will act as support. The body will act as support. So you have two support levels very close to one another. In most cases, when it's like this, the candle will touch very close and just change direction. So when you know that, you'll be able to enter this trade. Already, this small green, red candle tells you the bears are not strong. The sellers are not strong. Now we finish that trade, we switch into a downtrend, candles are below the moving average. Then you see this setup here. Let's see whether it worked out. Open from there, close below, open from here, gives you a losing signal. Now I don't know whether it started going down. That's the reason we have lost. This is a long week. If for sure you saw it going down like this, before going up, you should skip that signal. You skip it, you avoid it. But if it sure opened here and went up before going down, then that was a losing trade. But I've seen in most cases, when it starts going down fast before going up, you will lose. If you are waiting to do a call, if it goes up fast before coming down, you will lose that setup also. So that's another setup. Here we have, I don't know whether that would be a valid setup also. Let's see. I don't know. What do you think? Is this 30%?
No, sir, it's not.
It may not be 30%, looks like 20, but the candle is quite strong. You can see the candle is quite strong.
Yes.
So that if you are aggressive a little bit, you would have entered your trade here. That would have been a successful entry. So these are...
one thing I found, sir, when the resistance level or SNR level gap is more than this, like this one, then it is working very good. Little zone, sub resistance zone is too much difficult because breakout is not happening well.
Okay. That makes sense. That's fine. And again, you're taking a price action course. I believe some of those things you can add into the strategy to make it even stronger than it currently is. So you feel free to use any time frame. So let me see whether you have some questions regarding this. What I want to do is share with you some rules. The rules are written for this strategy. Let me see whether I can pick them from members. Members I'd shared with. Members of the college I'd shared this with. I think we have here Jeff. I'd shared these rules with Jeff. Let me see. Photos or where? I'd share this. History is not appearing. It's like the history is gone. I'll pick those and be able to share that with you so that you are able to see the specific rules I follow for trading this when I'm sharing also with the video. For now, Let me see whether you have any questions, any challenges regarding this. We can change into a different pair USD card, say 5 minutes, 15 minutes, and maybe a few more setups. You tell me what challenge you think there is. The strategy is that simple. It's that simple, but very powerful, as you can see. We have a clear downtrend here, a nice downtrend. You start drawing your levels. You have this, you have this, you have this, red, green. Remember, in a downtrend, a clear breakout, a touch at the top, ITM. You follow that, green and red. Now this is a big zone. Green and red, a big zone. A breakout, we did not touch, so you keep going. Green and red. Now this is a bad one. You cannot say this is green and red and you draw your line here. The red should reverse where the green also, somewhere close. In other words, the candle should be like this. A red followed by a green without major gaps. Seeing that? So red and green. So this is red, this is green. So this, then you can wait for a breakout. Didn't happen there. Then we have a red here. We have a green here, a long one. We have a complete breakout of this zone. Now there's one reason you should be worried about this breakout. There is a wick below the breakout. That tells you something is happening.
And the breakout is not 30% of the candle.
And the candle that's closed below may not be 30% if you look at it that way. But this wick again tells you there's support here. So you cannot do a put into support. I think you are aware of that. You can't do a call into resistance. You can't do a put into support. So that's why when you see the candle come back up, it doesn't work the way you expect it. So the next setup that I see here, there's no breakout there. Whenever I did this, there's no breakout, just that. So if I followed this one, there's no breakout again. This candle just started from outside. Then I keep going. I have this one. The body is here. I have this one. We have a complete breakout. Almost the whole candle is outside. We touch. So again, this is what I was mentioning. Sometimes you need safety. You enter a trade slightly above the level, not exactly at the level. If you want to be safer, you can do that. I also don't know whether I drew my line clearly, but that could be an ATM because the candle closed right on the level. Not a big deal. We have another case here. This and this, we break below, we touch, we close ITM. Now, you also need to remember one thing, because we are still making lower lows and lower highs. If you see we are not making lower lows and lower highs, you should be worried. The setup may not work because it means the trend is no longer down. Okay, but here it's clear the trend is down. So here we are having something close to a double bottom. So you may not expect anything much from that kind of a setup when we have a double bottom. Luckily, we did not even have a breakout. So switch to the upside, green and red. This is not a true breakout because the candle opens it inside the zone. So we are looking for another setup. There's no breakout here really, we can trust. So just go for this. Here. We have our ITM here, you can see that? Yes. After this breakout, we have our ITM right here. Then we have this. Now we are going down. We have our ITM here after this clear breakout. So I know the reason I'm doing this, people may not know when I am telling people you come to the college and learn, you master strategies. You see, once you get to know a strategy like this and you can be able to go through a chart from even the beginning of August, look for all those setups. You get so used to the setup that when you open your chart, you start seeing one easily. And that confidence is what traders need. It's not about learning too many things. You just, okay, keep learning, but have something that is working that you can be using to be getting some ITMs throughout the day. So here we have something else. There's no breakout. So no big deal, okay? I told you when you see a setup like this, I told you something. This tells you a reversal to the upside. This kind of pin bar, you know this. So when you see a setup like this, it may not work most of the time. because this is a reversal, a bullish reversal, but you are trying to do a put. So it may not be able to give you the results you want. Okay, so then I think, so once you spot that, by the way, expect a reversal. Even here, for example, you see this, but now you can't even draw this because the candles are below the moving average, so it's not an uptrend. But assuming you made a mistake and drew it here and this candle comes, you should not be trading here. Why? You already see a reversal coming from there. This setup should be working like this. This setup should be working like this. In a better market, you should see the market continuously going down like this. Going down, going down, going down. And you keep doing put. Or going up like this, like this. But when you see candle coming against the trend for long, you don't expect much of success in that case. So let me get your questions. That is strategy number one.
One question. I only take the zone for first time cap.
Sorry?
I only use the zone for the first time.
I don't know whether you have something that's interfering with your audio from there.
I am searching. I tell you that the zone I will use. The zone I will use for the first time. It will break, then it will go, then it will come.
Okay, yeah.
The first time.
Yes.
The first candle or first time. The first time, not for the second or third time.
Yeah, the first time
only. Only if there is no level in the future, after that it will come here. I will not use. I only use for the first time.
We are using the most recent pattern, number one, and we are trading the first touch, not the second touch, not the third touch. Now remember how support and resistance levels work, or breakout levels work. If a level has been touched once, twice, it's likely to be broken by a candle now. Okay? Yeah, so maybe you can test it. Maybe you can test it for the second touch and see whether it will work. But for me, to increase the probability of success, I trade it on the first touch only. If there's a second touch, by the time you're getting a second touch, most likely there's a new pattern on the chart. You see, like, let's see whether that is the case here. For example, I have this pattern here. I have a breakout. This is coming here, has touched this level, but did not touch my level. All right? This one has come, touched, but did not touch my level. That's already a signal. This one has touched, but did not touch the bottom. Don't expect a touch at the base.
Yes.
I don't know if you're understanding. The fact that the first candle touched and never touched the bottom. So I was waiting for possibly another candle to touch my bottom here. The second candle also was not able to reach the bottom. That tells you you are not going to expect another candle to go to the bottom. This level is very strong. If you are sorry?
In the meantime, there must be another signal I will get.
Yes, and in the meantime, as this is happening, once you missed this one, as you're waiting for another one to come, you already have another 2-bar reversal pattern, which means you stop following this one, you start following this one. By the time this is happening, you have a new pattern, this one. So you are now waiting for this one to behave.
Okay.
Yeah, so now you keep on moving. Now you have a new pattern here, but this pattern is weird. Look at that wick.
It need not be used, sir.
No, this one you should not trade. This one you should not trade. And you know long candles are able to reverse the market. Huh? Long candles reverse the market. So there's some cases where you would trade long range signals, like here, a 2-bar reversal pattern, not the most recent. We have a clear breakout, we have a touch, and you are able to win. Now, these ones will not give you that 80 to 90% on average, because many things have happened here, okay? But you are able to see them. You will be able to see them happening on the chart. Here is another one. You can see this pattern right here on these 2 candles. Even after this pattern formed, there was another pattern here, but the market kept going. Breaks below, touches, and gives you an ITM. So if you know how to analyze charts properly, you can trade long-range signals like those. But for now, just master the most recent setups. The most recent setups only. That's how you can be able to secure a proper win rate.
I also can use it in the forex market as well.
Sorry?
I also can use this strategy in the forex market as well for 15 minutes or 5 minutes trade in the forex market.
Yeah, some of these things can be used in forex for real. They can be used in forex, but you see now in forex we may not be able to trade touches like that because our focus is we want more pips. Here we want price to close above our level or below our level, so we may not be worried so much about such kind of touches.
Okay.
But again, that's why forex is easier than binary options, because forex there's no expiry time. So a trade can be like losing. You enter the buy here. The market goes down, you leave it. Then it finally goes up and you make your money. In binary options, because of expiry, this many candles would have been your expiry time already and you are out of the trade. So that's what makes binary very hard sometimes, those expiry things. So a quick recap, remember, in our strategy, we are focusing on specific things. And as a way of reminding us what we have said, I know you love the video to watch, but I want to remind us again, in our strategy, we are following price action basics, what we know as the rules at work. We must follow the trend, and our moving average is telling us trend direction. This is EMA. This is EMA 21. Ask me, Bernard, why EMA 21, why not 19? I don't know. I just realized that 21 works very well. And remember, 21 is a Fibonacci number. 21 is a Fibonacci number. Fibonacci numbers are 0, 1, I think 2, there's 3, there is 5, there is 8, there is 13, there is 21, there is 34, there is 55, there is 89, 144, 233. Now, Fibonacci number works in the natural world. There is a way things work in terms of 1, 2, 3, 5, 8, 13, 21. There's something interesting about these numbers. And that's why, for me, I like EMA 21. And if I wanted to add another moving average, maybe I wanted to be so sure about the trend also, that I can add the next number. From 21 would be 34. So I can add 34. So I'm using 2 EMS to tell me the trend direction. When 21 is below 34, I know it's a clear downtrend. When it's the opposite, like this, it's an uptrend. Downtrend. Yeah, maybe it makes life easier for you. You look at it that way. And when the moving lines are separate, there's a bigger gap. It means that's a stronger uptrend. This space.
Then the strong trend.
If a very strong uptrend. This is where rejections are very quick, and sometimes you don't even get any. Look at it, for example, here. Very strong rejections because of strong uptrend. Breakout, touch, then goes and closes strongly above. Those that quite frequently fail are when the EMAs are very close, like here, these are range, or when they are very close together, narrow, like here.
Yes.
And sometimes I think having 2 EMAs would be better, because then you are able to use this gap as momentum. So when you see them gapping up like this, expanding, going further up, this one is increasingly going up. This one is, they are both sloping up. In most cases, setups here work like magic. Setups would be working like magic in most cases. Now this may not be a true setup because of the breakout. It's a very small gap there. That could be useless.
Yes.
But this one, you see? This one works. Because look at the gap between this and this, quite strong because of the momentum. I'm sure if you added MACD here, MACD would be giving you very, very strong histograms, bullish histograms. So I would still suggest, possibly if you want, you can add EMA 34. You create this kind of a zone between the moving averages to tell you the trend direction. So we were just doing a summary as we finish our class for today. We said rule number 1. I want you to tell me the rules we are following, because now this is part of your learning. I want you to master these things. And I want you to start even placing demo trades and sharing with the members on either in the academy, in the college, or even in the main group. You are free to do that as a way of practicing. So what was rule number 1 we are following in our strategy? First thing we are checking is trend direction. So how do we use our trend?
With EMA 21 and up if the and on EMA 34 if up for the if the price are up to the 21, then it will be uptrend, and price below the 21 EMA 21, then it will be downtrend.
So what do we do in an uptrend?
We do for calls.
Here we are doing calls only. Don't try puts. Here we are doing puts only. Okay. Then we have number 2. We have our pattern. There's a pattern we are using to pick our signals. Which pattern was that?
Green and red.
I called it a 2-bar reversal pattern. 2-bar reversal pattern.
2-bar reversal pattern.
All right. Just call it color change pattern. Color change pattern. We are changing from red to green, or we are changing from green to red. Okay. But avoid cases where we have this kind of long wicks. They mean reversals. If you are going down and you have a pin bar like this and a red candle after that, try to avoid such setups, because a pin bar like this says the market is supposed to go up. But remember, in a downtrend, we are trying to trade down. So you are going opposite this signal. All right. So good candles will be where they are, without long wicks, very small wicks. But where one is like this, where you have a candle like this and another one like this, that signal may not be very good, because you have to draw a very big zone. All right. So number 3, we realize we have a support and resistance. This is a zone.
Yes.
You remember the zone. Remember, it's always a zone. Body to wicks. Body to wicks. It's a zone. Okay.
Okay.
And there's nothing like you are able to draw a different zone from me. The rules I've given you are very clear. If I asked anybody to draw a zone on this pattern alone, they'll be able to do the same thing. They'll place a line here and they place another line down here. Very objective. There's no guesswork. There's nothing like I draw it like this, you draw it like this. No, we are drawing it the same way, all of us. Then we said, after we have done our support and resistance, what's the next thing we are checking? Number 4. We are waiting for a breakout. Okay. Now, the breakout. Tell me a few things about the breakout we are looking for in our strategy.
Breakout, the candle will start from the zone, downside from the zone, and it will cross the SNR zone. About the body of the candle will be 30%, minimum 30% above of the zone.
You are a quick student, I see. You are a very quick student. You quite mastered the rules quite easily. I mean, that is basic. It's important to know that when you are trading up, after you have drawn your zone like that, let's assume that's the zone, the breakout candle must open below the zone and close above the zone. If you are going in a downtrend, the breakout candle must open above the zone and close below the zone. Now, the part of the candle that closes outside the zone must be around 30%. In other words, if you see a very tiny breakout, like if you see a small portion of the candle, you should not think that's a breakout. And I think now you know what I'm talking about. If you see a very tiny part of the candle is the one that's above the zone, you should not consider that a breakout. I gave you examples, I think. Now, apart from that, then we have a breakout. What is next now? A retracement candle, correct?
Retracement, yes.
So we have a retracement candle that must come in a call, must come to which part of the zone? The upper zone or the lower part of the zone?
Lower, bottom of the zone.
The bottom of the zone, if you are doing a call. If you are doing a put, it should be the above part. The reason we are drawing zones, remember, each of these levels could act as support or resistance. So I want, if a candle is coming down, it should be rejected here first. But if it's strong enough, then it should be rejected down here. That's why we are using this zone. We will assume this resistance number 1, then, support number 1, and then support number 2. So a candle may not be able to break those 2 levels consecutively on the same candle. The energy may not be too strong. So after it has touched, tell me about something about the candle that touches. What are some of the characteristics of the candle that touches your level? Let's say we are doing a call.
Yes.
We are doing a call. We have our resistance here. We had our pattern here. So we have drawn our level, something like that. We have a very strong candle that started here and closed somewhere above here. Now we are having another candle coming back down. I want you to describe this candle. What would it be? What would it be like before you take your trade down here? What should it not do, and what should it do?
Come here. After that, I will take a trade.
It should come and touch this level. You enter your trade.
Yes. For call option.
Yeah, expiry being?
Expiry being, if it is 5-minute candle, then the time it will touch here, I will wait for this candle expiry.
Okay.
That trade will be closed into this candle.
All right.
Whenever it can be 1 minute, 2 minutes, any minutes it can be. When it will touch the bottom, then I will take.
All right. What if my candle that's supposed to come and touch my bottom here first does something like this? Goes up, then changes its mind and starts going down. Should I take a trade here?
No. If it comes down, then it will go up.
Yes, it can go up. It can go up a small portion, but then it should immediately start going down. But what I don't want to see is it spends like 2 minutes going up, then decides, okay, we can't continue going up, and then it starts going down for the remaining 2 minutes. That you avoid.
Yes.
If you follow those rules, my brother, all of them, the way I've shared with you, you can be confident you have a strategy that will give you between 80 and 90% win rates. You follow those simple rules, you should be able to get that. And the beauty, like I've shared with you, trade from whichever time frame you feel comfortable on any currency pair. We have done our test with USD CAD. The other one was Euro USD. You can test it on any other pair. The results will be the same. But of course, as usual, try to trade it on currency pairs that always move, the major pairs. Okay?
Is there any suitable time for this?
Is there any
suitable time?
A suitable time to trade? Yes, that's an important question. The perfect time to trade this is the UK market, London, all right, London session, and the New York, the US. These two are the best sessions to trade. So I always like trading this at 8 a.m. GMT time, when the UK session opens, the London market open. Very good time. Why? Remember, it's the UK session and the US session that is trending most of the time. The Asian session never trends easily. So always apply this in a trending market. Trending market would be the US market or the UK market. Don't try the Asia. The Tokyo market is usually ranging. In a ranging market, the signals don't work well.
Because there is no that much volatility there.
Yeah, we don't have enough liquidity in the Asian market. So the markets, you see the candles going up, doing such kind of stuff. So the Asian market is usually good for range trading strategies, not trend following strategies. This is a trend following strategy. You cannot apply it in a ranging market.
In this five strategies, will be any strategy that we can use in 1 minute?
Sorry?
In that 5 strategies you want to share with me, is there any strategy between them that I can use in 1 minute?
Just type it. The voice that's coming from your side, I don't know whether it's you using loudspeakers or something, it's too sharp. Can you use can you use the chat to just maybe type your question? Because I'm struggling to hear what you're saying. You can type here. unless you're very close to something like a radio or another machine that's affecting the sound that's coming from your side.
Is there any strategy between these 5 strategies for use in 1 minute?
Are you able to type here?
Yes, I am typing, sir.
Yeah, okay, okay. Yes, one of the strategies will be on a 1 minute chart. And with 1 minute expiry. Fortunately enough, the same strategy, you can use it on 1 minute, you can use it on 5 minutes, you can use it on 2 minutes. It's based on the candle you are trading. I mean, let me show you. That strategy, if you load the 2 minute chart, you should be able to trade 2 minute expiry. If you load 1 minute, you should be able to trade 1 minute expiry. It's based on candle open, candle close. So that one is not based on touch. You confirm your signal when a candle closes.
Okay.
Yes. So, and I've carefully arranged all my strategies so that you have variety. You have variety. You may find one you are more comfortable with, one you may not be very comfortable with, and depends, because maybe you have one strategy that you like a lot. When you open the chart, you don't seem to see a signal. Then you switch to another strategy and find a signal. So because in good trading, you need at least 2, 3, 4 signal strategies. So when you are here, you are able to see, oh, I think there is a signal here. And maybe you're waiting for the other strategy to say, maybe you have drawn your support levels and you're waiting for a candle to close on the same level. It has not happened, but you have seen a breakout and you're imagining, okay, candle might go back and touch the level, yes. So it's good to combine several strategies on the same chart so that you're able to get more signals. That means you spend less time trading. All right, so what is your evaluation of today's strategy? As you want to practice it, do you feel is something, do you think from the description, from the testing we have done, is something that you can start applying?
Yes, it's great, sir. Thankful to you that at least I need some strategies that will work anytime, sir. That's not matter. I will need some specific. Here I am using in 1 minute. I am using 100 of trades, and I am using 60 trades and doing 40 trades. That's not
Okay.
or that's not I am searching for.
Yes,
So I will
yes.
trade only 20 trades, and that must at least 18 to 16 trade will be 80% issue is good for the profit.
Okay, I think you should be, it's okay. You can aim at I don't know when you are starting what your objective is, but you can simply have a way of saying, for me, I'm only taking 10 trades a day. I'm taking 5 trades a day. You go to your chart here and say, maybe this is 5 minutes. Just start scanning and see whether you can find an opportunity in the 5-minute chart. And that's what you need to do. You start seeing your opportunities as when you see a trend like this, like already we said, you can just add another moving average here. When is that? You can add another one here. We said you can have 34 also. I mean, nothing stops you from putting these things together. So the same thing, I'm just using MT4 because it's easier to scan the chart, because sometimes IQ platforms keeps freezing. So when I'm teaching, I find it easier to use this other platform. So you could be having these two, and you can say, maybe the 21 one, you can make it green, a different color slightly, just to distinguish. So all you need to do is when these things are like this, then you start drawing your levels. And already I can see a very quick signal here that happened a few minutes ago. Okay. A very quick signal that happened a few minutes ago. So you have to start moving in that order and seeing what's happening on the chart with quite a good margin of precision. what works best sometimes when you see a very long candle breaking out like that, they tend to give you better signals. Strong, solid candles. Strong, solid candles. Like this one here, but nothing. The price did not come back to that level. Strong candles, whenever they break out, they give you good results. Is this one a breakout? Yes, this is a breakout. Came back to the touch, and that was also a good signal. Even on IQ, the same thing. Doesn't matter which platform you are using, you can use the same exact rules. Here we have this, but there's no breakout because this candle started from outside. And you can do that. So sometimes when we are breaking, remember we drew this line, but the market went below. When it breaks above, we have now an uptrend. From here, you can be able to pick your signal again. You can be able to pick your signal from that level. So strong candles, whenever they do a breakout, something nice happens. You can even see long range trading. After this breakout, from this to this, you can see the next candle does some justice for you. But this could be, now remember now, when you are combining both, the candles are above both, even though the lines have not crossed. You should be aware of that. Huh?
Okay.
Now remember, according to the higher high, higher low principle, we have created a high here, which is higher than this. So effectively, we could be in an uptrend. But remember, moving averages are lagging indicators. They are slow to react. And that's why, if you only depended on the moving averages, you could be imagining this is a downtrend. No, but the candles are above both moving averages, so that cannot be a downtrend. So from your price action knowledge, you should be aware this is an uptrend. Then you can start drawing your lines. Already you can see here. You can see here, green, red. You draw your zone, you wait for a breakout, which I don't seem to see, but this candle opened inside the zone and went all the way up, and it's coming here. But when you are strictly following the rules, this is not a trade you should take. Maybe a trade you would take is one that would be where? Don't seem to see any. But just remember, also, a breakout candle should not be having a long wick. Remember that. Because a long wick means that was either exhaustion or a rejection. Exhaustion or a rejection. So this is what I'm saying. If you see a breakout candle, let me show you one that can also help you avoid some bad trades. You see, this could be a breakout candle, but look at the wick at the top. Rejection. That means if you try to place a trade after this candle, the market might just ignore you and continue going down because it is a signal that there are very strong sellers at the top. Similarly, if you took this one as your breakout candle, this one, you might be surprised why? Because there's a very long wick at the bottom, meaning buyers were able to reject that lower price.
Buyer's pressure.
Yeah, so remember, you need good candles, good bodies, bodies, small wicks, good bodies, small wicks. But still, when the market is very volatile, it can also give you those bad ones. Those bad ones can still be appearing on the chart. Strong candles like this will always work very well. They will always work very well. Strong candles. If you are able to target strong candles, you will be able to get very good results almost throughout. Almost throughout, always. Target those strong candles. Now the range is too big. I told you with these weeks, the problem is that the range is too big. The market, a candle may not be able to break all through to the bottom. But remember, eventually when that happened, you get a winner here. But in between here, we had other setups. So you should not be waiting for this ideally. You should now be moving up and saying, okay, now we change our entries. This is the level we break out. We touch, we win that. We try to wait for here, nothing happens. We come down. You wait for another setup here. Did it happen? This one did not happen, so nothing. So you wait for a downtrend and start going the other route. So you should be thinking of taking setups where the market is increasingly going up for an uptrend or increasingly going down in a downtrend. If you don't see higher highs and higher lows, don't be taking setups for every strategy, actually. If you don't see the market going up, down, higher, down, higher again, you need to be seeing that. But when you see, let's say you took this trade, let me assume you had a setup here. Okay, so you had a setup somewhere here. Okay, there's no setup here in the first place, but let's assume there was a setup. Okay, because this candle is very weak at the top. So let's say you took your trade here. Now the market is coming down. Will you be okay to take another trade here? Will that be right to take another trade here? You have seen this breakout and you are waiting for a touch. Will that be reasonable? Hello?
No.
Yes, you should not be thinking of doing a trade here because now we are no longer making higher highs. We have started making lower highs, a signal for a downtrend. Because this high before your signal is now lower than the previous high. But this trade would have been fine because this high is above the other high. A trade somewhere here would be better because this level is higher than the previous swing high. This could be higher than this. So you keep on going with in ladder form, up, down, up, down, up, down. When that order changes, things are getting bad. So let's keep it there for today's strategy. Tomorrow we look at a different strategy based on support and resistance levels that we draw. Remember today's candlestick pattern? We will be using that candlestick pattern tomorrow. Yeah? Pattern where you just identify those colors and you draw them, just those, where they, just like that. Our signal will be based on this, 1 minute, 5 minutes, etc. To give you a bite of what I'm talking about for tomorrow, here is what you would be seeing in one of the strategies. Because you asked, I will show you that in advance. I will just show you a setup, then tomorrow I will tell you why that's a very strong setup. We'll show you something. Here is something. That is a proper setup. Here is another setup. This is also a setup. You may not see what setup it is, but there's a setup here. Now, even if I go to 1 minute, very quickly, the setups are everywhere. There's a setup here. There's a setup within from here to here. There's a setup there. And at the top, you will find so many frequent signals or setups. Here, we didn't have a good setup. That's not a setup. So you will have plenty of setups. I will tell you for free. But somewhere here, yeah, but here there are setups also. This will be another strategy. There's a setup. I've just drawn a line, but you may not know how I've drawn it, but there's a setup here that wins. These are winning signals only. And even if the market is like this, you know, when you are trading live, oh, look at this. Is it news? Are we having news? How many green candles? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Oh my goodness. So this is where people get messed up in the market. They drew their resistance here. Candle closes, they lose. Then they say, okay, the market's likely to stop at the next level, color change level. Again, they break out, they say false breakout, they lose again. And this is now the market continues up, and now they say, okay, there's another level up here. Market goes there, they lose again. Then they say, okay, I think there was.
Can you get the right? If anyone follow the volume,
Yes.
then they will never lose.
Yeah, they would avoid that because they can see the market is increasing in volume also. But of course, along the way, the volume started decreasing in an uptrend, a sign of weakness. So they should know that. But the level that eventually worked is the highest level on the chart here.
Double top.
It formed a double top and then started going the other route. Anyone who tried to do a martingale here must have banned the account.
Excellent.
Anyway, the market is tough. But when you know everything, sometimes you end up losing a trade and there's nothing you can do. So we should accept some losses and move on. So unless you have a question, I would like us to end today's session. I will send you the video immediately. Watch it, test it, start sharing with me screenshots. When you go to the chat, start picking these setups and showing me. I would have taken this. Or you can even start taking trades on demo. I would have taken this. I would have taken this. This one lost. Why? This one was winning. this one was winning, this one didn't win, why? Then that's how we get to help one another. So be active, be active. All right, so tomorrow same time?
Okay, okay.
Thank you so much. See you tomorrow. Let me share the video with you. Thank you.
I heard many things about you from Excel and BWC and talk.
Sorry, your voice is low.
Ishak already Ishak told about you many things because he is your good friend.
Okay.
And so that was my dream to meet with you and talk and learn.
It's okay. We can talk more about some of those things even tomorrow's session. So we are keeping tomorrow's session just like today.
Okay.
All right. So see you tomorrow. But between now and tomorrow, you can start sharing with me your findings and what you think about everything as we keep on moving to strategy number 2. So tomorrow I will share with you 2 strategies. On Wednesday, I'll share with you 2 strategies. So today we have done 1. This is the one that had more rules. Apparently, when you follow this strategy very well, it is extremely, extremely profitable, very profitable. This strategy we have done today. That's why I started with it. And it's for those who are patient. If you are patient to wait for the setup, you will always say, I'm happy I am a patient person. Why? The setups will work almost always. Then we look at two more and 2 more on Wednesday. This will be easier to implement. Just like I've already shown you, just draw a support and resistance, wait for something, and that is it. Draw a trend line, wait for something, that is it. Include a Bollinger Band, and when market comes, the Bollinger Band does this, place a trade. They'll be pretty simple strategies, but very powerful when used. So thank you. See you tomorrow, God willing.